Hey guys, Mike here. So obviously you guys asked a lot of questions about small cap stocks and what the Russell's going to be doing in 2022. So following up my video from yesterday, if you didn't see that, I'll link it at the end. This kind of ties into that and exactly what the institutions are saying, what big money's saying about small caps, the Russell 2000 in particular, and what they see in 2022, especially in the first quarter. And before I get into that, I just got to say, did you not see what the institutions pulled today? Did you not see what they did with those stocks that they have absolutely beat down, shorted to death this year? If you didn't, let me go ahead and show you here. You got all these high growth stocks, SoFi, BABA, NEO, XP, DraftKings. Look at how far these things are up today. And this isn't retail investor buying, guys. We don't have this kind of money. Look at this right here. Baidu, ChargePoint, Robinhood, JD, Upstart. Look how big they're up today. I'm recording this around 3 o'clock right now. They're probably still off a little bit at the end of the day. But that is amazing. And then look at the stocks that they actually rode all year long. They just traded flat. And actually, now that I'm looking at the indices, they're actually all in the negative for the day. And I just thought that was kind of funny in ways. I wanted to bring it to you. I mean, it's amazing to watch how they manipulate these kind of stocks down, and right at the end of the year, what do? They buy in at the very bottom and watch what they do. I'm very curious to see what happens in the first quarter. I'm guessing they're going to be riding the hell out of these stocks going up in the first quarter, which is good for you if you own them. So, but it's just amazing to watch, these people talk out of one side of their mouth on TV saying, oh yeah, these stocks suck, don't buy them. And then on December 30th, they load into these stocks, and there's a lot more than that. If you pull up the small cap stocks, like green across the board, and so just amazing to me to see stuff like that. But wanted to point it out to you anyway. So let's go ahead and get into the small caps, the Russell 2000, because obviously it hadn't done nothing all year, especially for the last 9 months, been trading sideways. And so what it's going to be doing, what the analysts are saying, what to expect on the charts, and at the end I'm going to show you why that may or may not come true. And so obviously a small cap stock anywhere from 300 million to 2 billion. And really when it comes to the recovery of the U.S. economy, the $2 billion stocks are really the ones going to carry the weight for us.
Is next year going to be the year that we see that outperformance that it feels like strategists like yourself have been calling for quite some time?
Thanks for having me. And yeah, I think next year could be a good year for small caps, and we actually could see a good decade for small caps. I think, we've been in this environment where small caps have lagged. We've typically seen them do better at this time in the cycle than we have. And, despite the economic recovery we've seen so far, that hasn't really been reflected in valuations. And now with some of the COVID concerns, the relative PE ratio of small versus large caps is now, collapsed to, extreme lows below where we were during COVID. So, I think a lot of the bad news has been reflected. And if we aren't in an environment where, Omicron doesn't derail the recovery, small caps are, more exposed to services spending. They're more exposed to CapEx recoveries in the U.S. So we think it could be a good year for small caps.
The small cap space in general is a place that's been overlooked this year. You've had small caps underperform large cap by 10%. And a final comment is if you look at small cap growth, it's actually underperforming small cap value by 20%. So opportunity to get exposure to companies with great U.S. domestic exposure. Their valuations are more attractive than they've been in a long time in small cap. You actually are paying a 10% premium versus a 37% premium.
And basically the key thing you need to know about small caps is they are very, very cheap. They tend to outperform when the economy is running above trend. And they also tend to outperform ahead of first Fed rate hikes. So once we get through this short-term issue on Omicron, we do think the setup for small caps is very nice next year. And you should really see it benefit from some inflows as well.
Cap sector is earnings growth has been better than in the large cap sector, and valuations are lower. In addition, we are seeing a tremendous amount of innovation that should benefit not only small cap growth, but actually some of the small cap value areas where we're seeing innovation in areas that are not necessarily traditional areas like EVs, driving industrials to multi-year outperformance. So we are very bullish on small caps, and we think that next year, particularly with somewhat higher interest rates and a little bit higher inflation, will be a very good backdrop.
I think as we get through the beginning of 2022 and you see positive earnings revisions in small cap, you're going to see small cap start to outperform again. And when you look at valuation for small cap versus large cap, usually what you see because of the higher growth prospects in small cap is an absolute PE premium, but right now it's at a discount. It's trading around 19 times 2022 earnings versus the S&P trading at a premium to that.
And this leads us into the exposure of the Russell 2000, which is a lot of these small cap stocks. And if you didn't see my video yesterday, what the rich, the big money, the institutions, what they're thinking is going to do really good in 2022 in the environment we're going to be in is healthcare, financials, technology, and energy. But you can add real estate in there as well because it does good in the economic climate we're going to be heading into next year. And you can see it's about 65% of the Russell makes up those 5 sectors. And going into the chart here, you can see what I was talking about. I mean, it's traded in this channel since almost January. And so it busted out of it one time. We keep thinking it's going to do a breakout. It did not. Came back down, bounced right off that trend line. And so it's been moving up a little bit. You can see, you know, it basically was in correction territory there for a while. That's why you see it oversold on the daily RSI. And the only time you see it oversold that much when we look back in the chart is during corrections. And if we go back, you can see back here in 2019, it did the same thing. It traded sideways in a channel and then broke out in December and then leading into 2020. And then unfortunately, we had the crash. So who knows where it would have went. And then looking at 2018 when they did 4 interest rate hikes and the Fed was actually tapering and trying to lower their balance sheet down. You can see right here, comparing this to the NASDAQ and the SPY, or the S&P, excuse me, you know, you can see right here, the Russell actually outdid, at least going into mid-year, the SPY, and it kept up with the NASDAQ going through June. And if you look to the far right, that's when we had a major market correction. So all the indices just crashed down right there. But during every single interest rate hike, again, you'll see this in the video I put at the end. I actually label them for you. There was at least a 5 to 10% move down in all the indices when they did those interest rate hikes. And so for all the reasons listed by the institutions and everything, you know, yes, should it, you know, bust out? Because usually when you consolidate sideways, especially that long, you know, there's usually a move up. And so we'll see. But the one thing I found was they were talking about, you know, how small cap, and you heard this from some of those ladies, that, you know, the GDP numbers, the growth and all this stuff really affects small caps more than big caps. And so I found this data talking about GDP and how it will affect small caps. And this is where I think we might run into a little bit of an issue. And so this is data I found that was put out about a month ago. And it says, you know, the batting average of the Russell 2000 and GDP year-over-year percentage ranges. When it's 3 to 5%, you're looking around 45%. When it's 5+%, you're looking 65%. And then if you scroll over, as we compare this to the Russell 1000, you'll see average return, 3 to 5% of nominal GDP growth. The Russell 1000 outdoes it, but then we have 5+%. You know, you see the Russell 2000 easily outdoes the Russell 1000. And then if we go into GDP growth, you can see right here, this was 2021 right there. And you can see we started off with a bang the first 2 quarters, then fell off a cliff. They're actually projecting 6.5 for Q4. I don't know how that's going to happen. But more importantly, going into 2022, you see we dropped down to 2.2, 3.1 forecast, 2.9, 2.8. And then you can look right here, you know, even Goldman Sachs there is they see in 2022 GDP growth of 3.8%, down 4.2% previously for the year. And so obviously a lot of this depends on GDP growth, and if forecasts are correct, it still looks to set the Russell up for a nice return. The confusing part is trying to figure out when this is going to happen, because it seems like everybody's saying from this day to the end of first quarter is when you're going to get your biggest gains in these small caps. And so that's what I found, at least. And so looking at the projections for the GDP, obviously they're not even close to 5% if everybody is correct. So a lot of this depends on the reopening, because, you know, small cap businesses, those are the driving force of America, actually, those smaller cap businesses. And so, you know, we'll see what happens. You know, let me get your thoughts in the bottom there. If you got any facts you want to throw in there, I always appreciate that. Please put the source as well, and let me know, do you think small caps are finally going to break out to the upside, which has been predicted for the last 6 months. But as you saw before, it's trading like this before, not too long ago, and then it was breaking out in 2020 until we obviously had, you know, the crash happen. So who knows where it would have went to. But anyway, I just want to put that out there to you. A lot of you guys were asking about that, you know, and it's also going to be interesting to see those high growth stocks that were absolutely bought up like crazy today by institutions and the big money. Are they going to start riding those up in the first quarter as well? And one thing I am going to pay attention to, I put this video out January 26th of this year. I'm going to pay a lot of attention to see if there's going to be any warning signs coming out of big money and the institutions about, you know, some kind of big correction coming, crash, whatever you want to call it. And so if that happens, I'll put it out there to you, because I did that one, and 14 days later, you know, QQQ just tanked, growth stocks tanked for 3 months. And so, you know, always good to listen to big money, where they're putting it, where they're taking it out, and so that kind of stuff. So anyway, hope you guys have a great New Year's, and I will see you Sunday.